Hey everyone, welcome to the KE Report, a daily editorial chatting with TG Watkins. TG is the director of stocks over at Simpler Trading, also editor of the Profit Pilot website. As we always do with TG, we're going to go through the markets and really dive into his technical outlook. TG, there's a lot for us to talk about in the markets because now the markets have, the US markets that is, broadly rebound over the past week from what was a very bad 3 week stretch. Everybody got all bearish, and I find it interesting that you were actually out there starting to buy this market almost right at the bottom, maybe a day or two right before the true bottom hit. Now, even to start this week, we're seeing a very strong start to the week and a gap up. Most markets are up right around 2%. TG, what were you seeing in the charts when it did seem like everybody was so bearish, worried about just further market crashes more in the second week of this month? What'd you see in the charts?
There were a few things, and I always talk to people that I say that I feel like my job for the stock market is kind of like a detective. We got to find all these clues and put everything together and figure out what the story, the narrative is, and what's happening here. And I actually have a free webinar coming up on this Wednesday, so the 26th, where I'm going to be diving into this a little bit more in depth to kind of cover all this and show people how I figure this out through the Moxie indicator and all the other tools that I use. But basically, I kept looking for the bottom on this market, and it definitely went further than I thought it was going to go without a bounce. I thought maybe the daily 200 was going to bounce, but it didn't. And then finally, when it became clear, I thought, okay, we're heading straight for a 10% correction before we do anything else. And that's exactly what the market did. But then right when the S&P got to about a 10% correction, we started to see positive divergences. Basically, I'm looking here on the 13th of March, the S&P made a new low. But then we look at other things like FNGA, which is the leverage ETF of the FANG stocks, actually made a higher low. Tesla made a higher low. We started seeing other things that were not necessarily confirming this. We even looked at the UVIX, the VIX. The VIX made a lower high, even though the S&P made a lower low. And so these divergences started to show up, and I said, yeah, I think this is about it. And then we could also look at volume on a couple things and some of the tickers that I look at that help show the broad situation. There was a massive volume day on the low, and that would usually be what you consider to be a capitulation low. And then on the 14th, we had an up day, and again, I'm looking at one of the tickers that I like to trade, and I'll be explaining this in the webinar. But it had a massive volume. In fact, it was bigger than the flush out low from the 10th. And so that looked to me like it was buying volume because it all occurred in the first hour on this price move straight up. And so I thought, okay, we're looking pretty good. And then basically the market started to reclaim some levels. It started to get over the daily 8 EMA. That's good. That's kind of the first step. It started getting over the hourly 50. Okay. And then we saw some bumpiness in through here. We had FOMC, we had triple witching, we kind of had some other stuff like this, and things were kind of expected in through here. I thought they were going to be a little bit bumpy. But by Friday, and this is really where the key was, is that the S&P had pulled back into an uptrending moving average, and I got a Moxie price trigger that day. And so I made a video for my subscribers that day, and I said, hey, this looks pretty good. It was a little sketchy in the morning, but the way that Friday closed and the way that these moving averages look and the Moxie indicator is now firing, all this other kind of stuff, I said, I think we've hit the low, and I think we're trying to work our way back up. And then amazingly, over the weekend, we get some, call it good tariff news or less bad tariff news. And that's really all the market needed in order to pop things up, because going into Friday, I said, hey, I think we're good. And then we just got some news to help grease the wheels, and now we're up here like this.
Well, TG, it's an interesting point that sometimes things are setting up, and we were talking about this off mic, that they're setting up technically for a move, and they're just looking for a catalyst, and the setup is there. So like you're saying, the volume's coming in on the buying days, or there's the divergences where they're making higher lows, or in the case of the moving averages, price pulling back to a moving average that is pulling up. So everything is setting up for a potential bounce. Then the catalyst comes and it's like, boom, you're off to the races. So maybe talk about the marriage of technicals with a fundamental catalyst.
Yeah, that's exactly what this was. Because this is why I always tell people that it's very fascinating to experience the market and kind of be in here as this job. Because, I'll see some things where I'm looking for a setup. I see the setup. Okay, why isn't it going? Why isn't it going? Why isn't it going? And then finally we get the pop, and based on news, it's like, yeah, the market kind of was getting ready, but almost felt like there was something out there that it was waiting for in order to really convince it or to get it going or to act as cover, whatever it might be. This might be good news, might be bad news, whatever. But that's kind of what it seems to do is we just need that thing to help trigger it. And that's what I've been saying over the last few weeks. It's like eventually I think the Bears are, they got paid. They got a 10% correction very fast. And now we just need to see, okay, can we finally turn the tide? Can we get the Bears to finally get nervous about something? And can the Bulls finally start getting some traction here? And, as I said, I started seeing that I thought the bottom was in on around the 10th, 11th, 12th, something in that area. And it just couldn't go lower. Every dip that we got, I think the market dipped on the 18th, and then again, it dipped on the 21st, which was Friday, but it wouldn't go lower. And now we have this news in it, and now we're popped up, and it's like now it's okay. Now it's obvious. Okay, now we've actually cleared to some recent new highs, from last week. Okay, that's good. We're already back up to the daily 21. That's good. That's progress. And I think we're going to go a little bit higher in through here before we run into some resistance. So if that's the kind of the next thing you guys want to talk about, like where we're going from here, we can do that.
Sure. Yeah, let's talk about where the key levels are because this is obviously going to be the key topic. Is this nothing more than a dead cat bounce, or are we going back to all-time highs? So what do we need to take out on the way?
Yeah, so basically, as I've been telling subscribers and anybody else that you guys been seeing me on YouTube, is I do think that clearly after a 10% move down, we're going to get a big bounce. Now we need to see what kind of action this gets. Like this is really just kind of the first big bounce that we're seeing. So are we going to get some follow through? I'm looking for initially, well, we've already hit the daily 21, so that's the first thing. Then I want to see if we can hit the hourly 200. And then the big picture is, can we even get back up to the daily 50? And that doesn't mean the daily 50 as it stands right here, right now, because that's like, call it 59.10. It's the daily 50 for however long it takes for it to get there, and that's a moving target because, well, the daily 50 moves every day that we go on. So I'm sure it's going to come down a little bit, and we'll see where that actually ends up being. But that would be the major bounce if we can get all the way back up there. And then I'm going to be very cautious because, this is really, we went down, we went up, and we don't quite know yet if this is ready to continue moving. So there's going to be a lot of messiness in through here. I do have my general idea of what I'm looking for patterns. And I think also part of it is it's going to be based on news. We're going to have to see how the whole tariff thing is, how's the market handling it, whatever. We do need to be a little bit sensitive about that because the market is clearly responding to some of these things out there. And the fact that Trump has said he's not watching the stock market. Besant has said that we're going through a detox period. And Powell has said that they're not going to immediately react based on interest rates based on this market situation. So the market can kind of do what it wants to do. And I'm prepared that it could go lower after we do finally get this big bounce, this multi-day bounce. Mostly because there's no, I don't think the narrative has necessarily changed yet. They are still doing tariffs. We are still trying to rein in government spending. And so I'm not entirely sure that the market's just like, oh, okay, fine, we're ready to go and keep trending higher. I think we need to work a little bit more stuff out until we can do that. And I'll also be looking around at individual stocks to see if they actually start setting up in a very clean way or not.
That's actually a good question too, is like, do you have any bellwether stocks within certain sectors that you look for the signal first before the rest of that sector? Because if we do see a bounce, but then it starts rolling back over, there's still the potential to go back down and challenge the low we just had. So are there any bellwether stocks that you use, or do you use ETFs instead? What do you use as far as your crystal ball, as far as an early indicator in certain sectors?
Yeah, I would certainly expect that the broad market is probably going to retest the low area again at some point. That's why we do need to be careful as far as trading the index. That's why I've said we've seen a lot of YouTube financial influencers out there being like, buy the dip, this is how you get rich and all that kind of stuff. I'm thinking, this might be the time that we need to be careful about just buying the dip because buying the dip works when we're in an uptrend. I think we've at least broken the strong uptrend that we've had coming out of 2022. And now I think we're going to be into some uncertainty. And so while we may not go into a bear market, I am not entirely convinced that we're just going to come right out of this thing and keep going higher. So cautious about those financial influencers that are out there. And so as far as bellwether stuff, mostly I like my ETFs. They kind of help give me an idea what's going on. Of course, the mega caps, and then the small caps are also going to be another thing. If I see that the small caps are like actually starting to set up and looking great, then that kind of means like, oh, somehow the risk is on. Bitcoin is going to be another one of those because Bitcoin actually acts kind of like a small cap. It's going to be a risk on type trade. And if it's not really moving and grooving, then I'm going to be cautious with the market. And as I said, I feel like the narrative right now hasn't necessarily changed. There's still a lot of uncertainty happening with Trump. And whether it's a good thing or bad thing is just kind of uncertainty. He's out there fighting the fight for America, and people are fighting about it. So the market's not like just happy go lucky. And that's why I think that we just need to be careful out there. And when the market does start to set up, you will see individual stocks actually start to lead the way. That's what I tend to find is individual stocks will actually start looking good before the market does, and that helps tell you if something's going to be working.
What about simply the high-flying tech stocks? We have seen that those alone can carry the markets higher when we see that concentration of capital go just into the Mag 7. It's been a real mixed bag, but generally quite negative for that Magnificent Seven. How closely do we need to simply pay attention to that, judging on broad markets?
Yeah, very closely. That's why I like to trade FNGA, FNGS, MAGs. Those are all the ETFs for the mega caps. Watch the NASDAQ, watch the XLK. Absolutely. They got hit huge. I mean, this is a really big deal. I mean, this was, I think, as big as a move down. Oh, maybe just a little bit less. Let's see, I'm looking here. Yeah, actually, just about the same from the yen carry trade low. Do you guys remember that thing when the whole yen carry trade kind of had to unwind? That looks to be, it was from tip to tail, it was about 21% in the MAGs, MAGS as far as that ticker. And from tip to tail, this is about, 21%. So this was as big as that one, but it took a little bit longer to set up. And then finally the trap door opened. And so, and even if you look back at that yen carry trade, that was kind of a flash of the pan. It's like, okay, surprise, the Bank of Japan is changing some stuff. People have to reallocate. Now, we have just now found the bottom. I mean, really, like, if you look at MAGS, this is the first day that you can definitively say that we have bounced from the low. And so that's why I'm encouraged that we should be seeing more higher prices for the next few days, maybe a couple weeks. We'll have to see. But after that, we're probably going to run into resistance, and then we're going to have to come back down and retest the low. That's where the question is. That is the major question is what happens during the pullback, because finding the move up can be easy. It's knowing what the pullback is going to do, because if the pullback comes down and we actually get weaker and go lower, then we're weaker. But if we come down, we find support, and we actually start moving up again, then great, we can change to our bullish stance. But that's how we take it one step at a time. Right now, I'm in the first bounce phase. Then we run into resistance. Then we look for a pullback, and then we see what happens there.
All right, so you kind of have this chain of events here, the first bounce, the pullback, and then where does it go from there? Are there any stocks or any sectors showing relative strength, TG? Are there any that seem to be either pulling back less and recovering faster or accelerating out of this move faster than the rest of the pack?
Well, as people have been talking about consumer defensive as far as some of the places, healthcare, things like that, but just don't really trade those. They're just not very exciting. I don't really work with them. So I am kind of at the whims of the market, which is fine because when they come down, I go to cash, which I did. And then when they start moving up, then I start getting back into them. So I try to avoid the downs, I catch the ups, and then just kind of do that wash, rinse, repeat. Tesla, we managed to find the exact low on Tesla. We had to hold out for a double bottom, but now we're making some good gains on that one. So that's going to be something that's big. And then I also look for stocks that have actually been holding up pretty well. So a couple of the other ones I've been watching and actually trading was Root, ROOT, and GENI, GENI. They did amazingly well through this entire period. And now that the market's popped up, they're screaming with the market. So happy about those.
TG, in this environment where, again, it's very politically volatile in that sense, at least the market reaction to everything we're hearing from Trump, do you take smaller position sizes then, or do you watch your trades even closer on a more short-term basis because of the fact that trends can switch the blink of a tweet?
Yeah, back to the tweeting thing, huh? Yep. So, yes, initially I'll get stopped out, or if something doesn't happen right away, I will be quick on the trigger to just get out because, like, oh, maybe that's not the right spot. This whole pullback that we had, I wasn't sure if we were going to go straight to 10% or if we were going to bounce on the daily 200 first. And so I was taking some trades around there. I did have a nice options trade it was a Friday into a Monday. I made 100%, then 150%. And that was great. But then I tried another one and it didn't work because it was just too early and the market wanted to keep going down before we actually got a major bounce. But now that I could see that something was here, I had to hold through a few things. And then I do take my kind of initial position size on it. And if I get proven correct and things are starting to work out the way I think I do, or that they will, then I add to it. And so right now, my strategy is I'll do a little bit and then I'll do more, but I'm doing that on fewer names. Even though there might be a lot of names that are bouncing right now, I'm really kind of focused because Before all this, the market was doing great. I mean, we had upwards of 20 positions. I mean, things were going gangbusters. It was great. And the problem is that when things start to fall apart, now you got to unwind all your 20 positions, and that could be a challenge. And that's a lot of positions to have to watch if things suddenly turn. So yes, I'm just narrowing down, focusing on a few trades. It may not be as great as it or exciting as it once was, but given that we are not in a definitive bull market right now, that's what you got to do. And if I want to maybe add size to a couple trades, that's great because I'm only watching maybe 4 or 5 names at this point.
Okay. TG, always so interesting to hear what you're doing. And look, for a trader, I'm sure you don't mind this kind of crazy environment, but for the longer term investors, boy, oh boy, it can be real challenging looking at these markets and trying to make sense of what's driving these day to day, even hour to hour moves, especially when it is so much, in a way, kind of outside of simply the markets. But hey, always something for us to talk about. And congrats on really catching the bottom of this market move. And now, I guess big question is, are we going back down to test those lows or going back up to test those highs? Well, only time will tell. Again, if you want to keep following along with TG, click that link in the show notes. Also, join that free webinar coming up on Wednesday. I'll post a link to that so you all can be ready. TG, always great chatting with you. Thanks for your time today.